Hello everybody, Barry Sexton, Chartered Certified Accountant, here again to chat to you today and tell you a little bit about our accounting firm. We are not just number crunchers, we'd like to think that we're here to try and help people go where they want to go. So for most people that's generally tax planning, cash flow, which is obviously the most important thing, and business planning. So the first thing, obviously, is to decide where you want to actually go. Because if you don't know where you want to go, the chances of getting there are very slim. Obviously, it's like having no sail on your sailboat. I mean, you're not ultimately going to arrive where you want to go, are you? So that is the first thing. The second thing is how you're going to finance the operation, and you have to be sort of careful with that, although obviously you've got to take some risks in life, but you don't want to get into too much debt, because whilst it's nice to have your own business, it's not worth risking everything, but then again, that's a personal choice, and maybe for some people it is worth that. Life can be difficult, and if there's some sort of outline plan, the better chance of success, I suppose. The major issues here obviously would be what way to structure your business, whether you want to be a sole trader or a limited company or a partnership or a limited liability partnership. That will obviously depend on your circumstances and the degree of business risk that's involved in it. Because the corporation tax rate has switched to 25% on profits above a certain amount, it's now often, for a lot of small business anyway, often better to trade as a sole trader, and the tax liabilities are actually less, but if there is business risk involved, I would still recommend a limited company, because obviously commercial issues always override the tax issues, and that's just sensible planning. There are a number of options. You can still maybe take advantage of personal tax rates by using a limited liability partnership, perhaps disincorporating and going into a limited liability partnership. Limited liability partnerships are taxed under the self-assessment rules, so there's a chance there, an opportunity to have the best of both worlds. Having said that, limited company still offers a number of tax planning advantages. If you don't have to obviously draw all the money out of the company and you can leave it in there, you can you can build it up within the company, or build up the profits within the company, and take advantage of the 10% rate on retirement, or when you decide to sell the business, cease trading or whatever. Okay, well, there's enough to be going on there for today, I think, so I'll leave you at that, and thanks for listening.